Hello everyone and welcome to chapter 13, Financial Statement Analysis. In this lesson, we're going to break down one of the most practical tools in financial analysis. It is called the horizontal analysis and the vertical analysis. We're going to have two videos, one for horizontal and the second one for the vertical. So if you ever wanted to understand how a company's financial health is trending over time, these are two videos that you must watch. Okay, so let's dive in. All right, I guess that the logical thing to ask is, okay, what is a horizontal analysis? Well, the horizontal analysis is also called the trend analysis. It's a method used to compare financial data across multiple periods, usually from year to year, and it will tell us a lot of information. Our eyes are not designed to identify trend or changes or drastic changes in here. And as you can see, this is a balance sheet. This is the same balance sheet that you have in your PowerPoints for this chapter. Okay, I just put it in an Excel spreadsheet because I thought it will be much easier to make the calculation and to show you what we're trying to accomplish here. So if I go to the income statement, which is also the same one as is in your PowerPoint, then by doing that analysis, we can analyze the trend and changes here in the income statement. So we can also do that in the statement of cash flow, but that statement it's beyond the scope of this class. So we're going to stay with the income statement and the balance sheet. Of course, in order for you to do an analysis, you need to have a comparative balance sheet, meaning comparative meaning 2 years at least of balance sheets. And you know that the balance sheet is the statement that present assets, liabilities, and equity accounts, which is basically showing you the financial position of a company at a specific point in time. In the other hand, the income statement, it tells us the operations of a business. And we're going to use these two financials, right? Now, in order for us to start this analysis, we need to learn first a little formula. It's very basic, okay? So let me show you the formula right here, okay? So there's two of them that we can combine. The first one is that the dollar change is going to be the current year minus the prior year, all right? The dollar change is equal to the current year minus the prior year. So we're basically going to compare, let's start with this number. Let's start with cash and cash equivalent. So we're going to compare 2024 with 2025, okay? And we need to find out what are the changes, if it's an increase and a decrease, and how much it is, all right? Now, I'm going to give you a hint. Be careful because some problems, when you're doing it for the homework or the exam, it gives you the current year first and the prior year last. But sometimes it's vice versa, okay? So make sure that you look at these numbers first so you don't do the math backwards, all right? So the first formula is comparing this number versus this number, right? So we're going to subtract 25,000 from 48,844. Now, if I do that, okay, and I'm going to do a formula here in Excel, I will do it manually in a second. So it will be 48,844 minus 25,913. So that will give me a balance of 22,931. So that's formula number one. Okay, so we accomplish this formula right here, right? Dollar change, it's a current year, right? The current year, which is 2025, minus the prior year, which is 25,913. So that's the dollar change right there. So formula number two then is okay, the percentage change. Let's calculate this number right here. And it says that is the dollar change minus the prior year multiplied by the 100%, all right? So is the dollar change, well, we already calculated the dollar change. It's right here, 22,931 divided by the prior year, or also called the base year. Always is going to be the oldest year, okay? Always is going to be the oldest year. That's your base number, right? So here, the formula that I need then to do is to divide this change by the base year, right? So if I do that, I'm going to divide 22,000 divided by 25,000. That will be 88.5. So what that means is that my cash and cash equivalents increase from 2024 to 2025 by 88.5%. All right. Now I need to do the same thing for all the accounts. If I put a little formula here, I could do that, right? So and I will save some time, but I will walk you through it. All right. So let's pick then short-term marketable securities. So in short-term marketable security, what it says is, okay, I have 51,713 in the current year. Last year was 40,388. That's an increase of 11,325, right? I subtract this number, I subtract this number from this number, and it gives me 11,325. Now, this number by itself, it doesn't mean anything. It doesn't tell me anything. When it tells me something is when I divide this number by the base year. Now, remember, the base year is the prior year. Okay? So I divide 11,325 by 40,388, and that will give me 28%. Now, what is the meaning of that? The meaning of that is that my short-term marketable securities increased by 28% in 2025 from 2024. Now let's look for one that actually went the other way. Let's calculate accounts receivable. Okay. Now accounts receivable net, and when it says net, it means it is net of allowances for doubtful account. You already saw that in chapter, I think it was chapter 4 or 5 when we discussed receivable. So you know that is when it says net, is net of allowances for doubtful accounts. So we have 23,186, all right, in 2024. And now in 2025, the current year, we got 22,926. That's a decrease of $260. Now here, I think it is in millions that we're talking, okay, but it really doesn't matter. So there was a decrease of 260. Now, that's my dollar change. So now I'm going to divide that 260 by the prior year, which is always, you know, the year, the oldest year. I divide 260 by 23,186, and it gives me negative 1.1%. Now, you need to be careful here when you analyze this, because you might say, well, this is not good. This is an asset. It decreases, not good. No, this is a good thing, actually. You know why? Because receivable, what receivable means? Receivable means that this is money. It's a sales that I make the sale on account. I need to go and collect that money eventually. And when that receivable decrease, it means that I already collected that money. So that's money in your pocket. The more this number decrease, the more this one cash, it will increase, right? So that's really what happens. So be careful that concluding that because there's a decrease, it's good or it's bad. Okay, you need to analyze what you need to, you know, analyze what actually happened and what the accounts that you're looking for, right? Now, if I do the same thing, if I copy this formula, and I'm using Excel. For those of you that don't know Excel, it's not a problem. We can do this manually in a second. I will do this in the other accounts, right? And I'm just copy and pasting. So we can have the same analysis in the entire balance sheet. Oops. Give me a second, bear with me. I'm doing this as we go, so there's nothing done. So here's all the calculations. Now you can also calculate that for the balances, okay? It's not a problem at all to calculate the balances. So you can do the formula for the whole thing. And let me do the little formatting. Okay, just to save you some time, I'm not going to do all of this. But once again, if we do this process manually one more time, this is what it means. Let's pick this time a liability, right? We did a few assets. Let's do a liability, and let's do a stockholders equity. Okay, so here, look at what happened. Accounts payable. Accounts payable, we have 55,888. That was in 2024. And now in this year we have 46,236. The question is that a bad thing? No, that's a good thing actually. You have a debt, right? You need to pay 55,888 in 2024. Now you need to pay only 46,236. That means that your debt went down. So you pay some of that debt. So that's a good thing. So the difference between 55,888 and 46,236 is 9,652. So I subtracted this from this and it gave me negative 9,652, right? That's step number one. Now step number two is I'm going to divide this number by the prior year, right? The prior year, always remember, is if we're in the current year 2025, the prior year will be 2024. So I'm going to divide this number by 55,888. So that gives me 17.3%. Also, I want you to please practice with your calculator. That's important because, and if you do the assignment with one calculator, keep that calculator for the exam as well, right? Don't change calculator because that could mess you up. All right. The last one here for common stock. So in common stock, we have 40,201 in 2024, right? And then in 2025, we have 45,174. That's also a good thing, right? The company issues some stock and receives some money from the investors. So the difference between when I subtract 40,201 from 45,174 is 4,975. Okay, I subtract 45,171 minus 40,201, that gives me 4,973. Now I divide 4,973 by 40,201, that gives me 12.4%. Okay, that's a good thing. And then obviously you do this in your all your balance sheet. Now these numbers that you see here are exactly the same that are in your PowerPoint in the exhibit in your book exhibit 13.2. Now let's do one or two for the income statement. Your income statement, and it's the same process as we did before, except that this one it's for your income statement. Okay, so let's review this. So the prior year we have 265,595. That was the sales that you have, the net sales actually. And this year we decreased that, right? We did 261.71. So we need to subtract, as always, the current year minus the prior year, and that will give us a negative number, right? That will give us a decrease of 5,421. But we need to know that as a percentage of the number, right? That number by itself doesn't tell us much. So we're going to divide this 5,421 negative. We're going to divide that by the base number, which is the prior year, right? Always the prior year. So that will give us a percentage. Let me change this to a small percentage. And I'm going to put 2 decimal points. That will give us a negative 2.04 decrease in sales from 2024 to 2025. Now I can actually throw a formula so I can do the rest quickly. And that's basically all the calculations for this problem, right? So if I wanted to format this a little bit, give me just 1 second. I will say currencies, and the red are the negative numbers, the black are the positive numbers, and then we have here the percentage for each one of them. Just a few points to wrap up. Remember that the horizontal analysis help us to see the story behind the numbers. It answered the question of how are we doing over time, right? And it's a critical first step in the decision making. Okay, whether you are a manager, investor, or a student like you are, this is an important first step. So thank you for watching. All right, don't forget to practice by analyzing a company's financial statement on your own if you can. You can even try it in Excel to get comfortable with the real data. So any questions, do not hesitate to ask. Okay, I will see you in the next lesson. Bye-bye.